So we are still in segment 5.2. We are discussing sales under operating statement, but we're still in 5.2. We're discussing sales. We have discussed the concept of credit sales. I hope we are all comfortable with the concept so far. And also we have discussed the concept of debtors preparing balance sheet. Now once you are comfortable with these two concepts, let us take a small exercise and see whether you have grasped the concept totally. So take a look at this table. So we have financials for 3 years, right? There's a P&L account for 3 years, and these figures are extracted from the P&L account. This is not the P&L account. These are only figures extracted from P&L account and from the company, right? For example, this breakup between cash sales and credit sales is not actually given by the P&L account, right? It is given by the company. So let us assume these are the figures that is available for this exercise. Now let us try to answer the following 7 questions, right? Please pause the video and try to answer these questions. We'll then go ahead and solve the questions. So hope you have answered the questions. I'll now walk you through the solutions. So the first question asks, what is the sales figure in the P&L account for financial year 2012-13? So in the financial year 2012-13, what is the sales figure in the P&L? Please note that we have already mentioned P&L account has an item called sales. Since we're discussing the CMA data, there is we are now discussing the operating statement. In the operating statement, there is an item called sale. The sales gives the breakup only for domestic sales and exported sales. Please note that this is the only distinction that the sales in the CMA data provide. So sales does not distinguish between cash sales or credit sales. This we have already discussed earlier. From the company point of view, from the accounting point of view, whether the sale is a cash sale or a credit sale, we record it directly into the P&L account. So when the total sales appearing in the P&L account is 200, we don't know what is the cash sale, what is the credit sale, right? Because we don't distinguish. That is as per the equivalent concept of accounting. We are not concerned with the movement of cash. So in the P&L, if there is an item called 200 lakhs for a particular year, say 2012-13, if the P&L account says sales is 200 lakhs, the breakup between cash sales and credit sales is something which we cannot know. It could have been entirely cash sales and zero credit sales. It could have been 100-100 or 150-50, right? It could be 50-150, right? It could be any combination which we are not aware of. So please note that from the P&L account point of view, sales means the total of sales in P&L is the total of cash sales plus credit sales. So to answer the first question, in the P&L account of 2012-13 in this year, what is the sales figure? So please note that the total of cash sales and credit sales will be the sales figure appearing in the P&L account, right? So this will be 90 plus 290. It will be 380. Is the point clear? So the figure appearing in the P&L account will always be the total of cash sales and credit sales for the particular year. So in the year 2012-13, the company has made a cash sales of 90. That means it has sold goods, it has delivered the goods and already received cash of 90. The credit sales, it has made sale of 290 for which the goods were delivered. Payment could have been received or could not be received. Please note that we are not saying that the company did not receive the credit of 290 lakhs by the end of 31/3/2013. That is not what we are saying. Please note this point very carefully. Let's take an example whether the sales in a year is 200, right? Of which 50 is the cash sales and 150 is the credit sales. We are speaking of the year 2012-13. Forget about the excess which we're discussing. This is a separate example. So in the year 2012-13, a company has made total sales of 200, of which cash sales was 50 lakhs and credit sales was 150 lakhs. And we have been given the breakup of the 4 quarters. So in the first quarter, the company has made 10 and 30 and so on. So the total is which we're speaking, the 50 cash sales and 150 the credit sales for the year as a whole, and the individual breakup for the quarters is like this. Now please note that when we are saying that credit sales is 150, right? When we are saying credit sales of this company is 150 lakhs, what we are saying is not that the company did not receive cash as on 31/3/2013. So this year, financial year 12-13, comes to an end on 31/3/2013. So you might get the impression that because this is credit sales, this means the company has only delivered the goods but didn't pay. That is not the case. Please make this distinction very clear. as on 31/3/2013, the company could have received some of the sales. Say for example, the credit period which you're speaking here in this example is a 30 days, right? So see, in the first quarter has ended on June. Say June 2012, the first quarter has ended. So the sales which the company has made during the quarter, it will be receiving by at the most by the end of July 2012, isn't it? The sales made in April 2012 will be realized in May. The sales made in May will be realized in June, and the sales made in June will be realized by July, right? So none of the sales, assuming all the customers have paid, there are no bad debts, none of the sales of this 3 months will be outstanding as on 31/3/2013. They are already realized. So cash was realized for sales made, even for the credit sales. Cash sales anyway, the 10 lakhs is recovered by this date. In the same month it is required. It is recovered. The credit sales 30 lakhs was not recovered in the quarter, could have been recovered in the next quarter, that is by July or August. Somewhere it was already recovered. So please note that as on 31/3/2013, what we are saying is, we are not saying that 150 lakhs is yet to be received. We are not saying that. Out of this 150, some of this are already converted into cash. What we are saying is, at the time of making the sale, the company did not accept cash. The cash could have been recovered subsequently within the same year itself, right? As on 31/3/2013, please note that when you're saying for the whole year the company made a credit sale of 150, it doesn't mean that by the end of the year the company is to receive 150 lakhs from its customers. Out of this 150, some of it could have already been received. So how do you know how much the company received? So that for that you have to see the debtors. So as on 31/3/2013, let us see the debtors position is 30 lakhs. So now we can say, since the company made a total sale of 150 lakhs credit sales and 30 is pending, it must have already received 120 lakhs. Is this point clear? Right? Only when we know the debtors position can we comment on how much the company has received out of the sale amount. The credit sales was 150, fine, but 150 is not outstanding as on 31/3/2013. We can say by looking at the debtors figure how much the company is yet to receive from the customers, that is 30 lakhs. So it must have received already 150 minus 30. Had the debtors been 0, it means the company had already received 150, entire 150 lakhs from the customers, right? So we answered the first for 2012-13. What is the sales in the P&L account? This is the total of cash sales and credit sales. So this is 380, 90 plus 290. The second question, if sales figure in 13-14 for this year is 500 lakhs, what is the credit sales in 2013-14? You can see here we have the information for cash sales. We are asking what is the credit sales. What is the credit sales in 2013-14? The total sales is 500, right? So we have already discussed in the P&L, the sales amount appearing is 500 is a combination of both cash sales and credit sales. Since we already have the figure for 105 as the cash sales, all we have to do is the 500 minus 105, right? The 395 is the credit sales, right? 395 is the credit sales. This is 395, right? So let us look at the third question. If the company received cash of 210 lakh from sales during the first year of operation, that is, we are assuming that 2011-12 is the first year of operation, no financials prior to 2011-12. So this is the first year the company is operating. So the company received cash of 210 lakhs during this year in 2011-12. So if that being the case, what is the sales in the P&L account? So sales in the P&L account is cash sales plus credit sales. But in this example, we are not given the information on cash sales and credit sales. So how do we answer this question? So please note that if a company has made sale of 100 lakhs, let us assume in a full year 2011-12, the company has made sale of 100 lakhs. We don't know how much cash the company has received, right? The company could have received 40 lakhs, 60 lakhs, 80 lakhs, 100 lakhs. We don't know how much the company received cash. But we learned from the concept of sales that we are not concerned with the receipt of cash. So in all these scenarios, we would have recorded the same amount of sales. So the sales in P&L account in all these 5 scenarios is 100, right? But where the difference comes? The difference comes in the amount pending, right? Since we have received only 20, we are yet to receive 80 in the first case. In this case, we are yet to receive 60, 40, 20, 0. These are the amounts, right, that are due from the customers. So what is the amount due from a customers? It is these figures, and we learned that this is nothing but debtors. The debtors figure in the balance sheet tells us what is the amount due to the company from the customers. The company has made the sale, but we are yet to receive this amount from the customer. So this is reflected under the head of debtors. So if you see this example, in the particular example, the third question which we are discussing, we don't know what is the cash sales. That information is blank. We don't know what is the credit sales. We don't know any information. But what we know, it is the first year of operation, right? So at the start of the year, the company has no dues from the customers. But at the end of the year, the company had some dues, right? That is reflected in the debtors. So please see this third question. Here, in the third question, we are relating to the 2011-12. In 2011, we don't know what is the cash sales. We don't know what is the credit sales, but we know what is the debtors. So at the start of the year, the company, this is the first year of operation. So the start of the year of this year, there is no dues, zero dues. But at the end of the year, there are dues of 40 lakhs. So what the question asks is, if the company received cash of 210 lakhs, right? So the company received cash of 210 lakhs and still 40 lakhs is due from the customers, which means the company should have made a sales of 250 lakhs. See, please be clear on this. The company made a total sale of 250 lakhs for the year 2000. We don't know what is the breakup, individual breakup, but we know that the total is 250 lakhs. Of 250 lakhs, an amount of 40 lakhs is still pending as at the end of the year. As on 31/3/2012, 40 lakhs is yet to be received. So the debtors is 40 lakhs, which means the company had received cash of 210 lakhs. 210 lakhs is received and 40 is due, right? This due is nothing but the debtors, right? 210 is the cash received. So the company made sale of 250. We don't know the breakup. Still, we don't know the breakup of cash sales and credit sales, but we know the total sales the company should have made a total sales of 250, of which cash it has received 210 lakhs as on 31/3/2012, right? As on this day, the company has already received 210 lakhs and 40 is due. So the third question answer is, what is the sales in the P&L account of the financial year 2011-12? This is nothing but 250, right? See the fourth question. Will your answer in 3 change if financial year 11-12 is not the first year of operation, right? So if this is not the first year of operation, so will your answer in 3 change? So our answer was 250 lakhs, right? So would our answer had changed? Definitely it would have changed. The reason being, when we are saying this is the first year of operation, we are saying that the opening debtors, the dues from the customers is 0. But what if the dues were something else? Say for example, 30 lakhs is due from the customers as at the beginning of this year. As on 1/4/2012, we already had dues from the customers of 30 lakhs, right? Then our sales would have been what? Since the company received 210 lakhs from the cash, what we are saying is the answer would be 220 lakhs. So please see how we got this 220. The company must have made a sale of 220 lakhs in the year 2011-12. This is for the fourth point which we're discussing, the fourth question. The company could have made 220 lakhs. Earlier the answer is 250 because the debtors was 0, opening debtors was 0. Now the answer is changed to 220. I'll tell you why. So at the beginning of the year, that is as on 1/4/2012, we are assuming that the debtors is 30. The company has also made during this year a sale of some sale which we don't know, which we are saying 220, right? So during this year the company should have actually received cash of 250, right? But the question is saying the company received cash of only 210 and 40 is the debtor. See here, our answer has changed to 220 because earlier we had debtor opening of 0. Then we said because the company had made a total sale of 250, it has received cash of 10 lakhs and debtors was 40, right? This tallied with the debtors of 40. In this case, our debtors is still 40. The debtors is still 40. The cash received is also 210, right? So these two figures are not changing. Debtors is 40. Cash received is also 210. But there is an opening debtor of 30 lakhs, right? Which means in effect, this is not 40, this is only 10, right? So sales will be 220 lakhs. Is the point clear? It's a point which we have already discussed in an earlier lecture, right? The cash received, we have discussed the formula. Cash received is opening debtors plus sales minus closing debtors. I told this is not a formula, it's actually a plain common sense, but this is what we discussed in the earlier chapter. So here we are saying 210 is the cash received, and opening debtor we are assuming is 30, sales we don't know, closing debtor is 40, right? Which means sales will be 220. In the initial stages you can try to memorize this formula, but As you go along, you will actually appreciate it. It's not actually a formula, right? This is something plain common sense. So what we are saying is, see, take for example your salary. So let us assume we are in the month of November. So this is 30/11/2013. So this is the today's date. This is the November. Today you are to receive the salary for this month. So say for example your salary is 20,000. I know you are working in a bank, which is a very good paymaster. So you'll not have problems like this. But assume you're working in a private sector company where the salaries are not that prompt. I mean, there's a lot of pending areas of previous years or something like that, right? So when you in the relation between your employer and you, right? At the end of this month, you will not be looking at just 20,000. See, if your employer gives you 20,000, but he didn't pay you the salary of October, right? Still October 2000, 20,000 is not paid. And November he's paying you 20,000. Then you will ask him, it's not just the 20,000 for this month, right? You are to receive 20 plus 20, 40,000, right? It's not just the salary for the particular month in which you are getting the payment. Okay, this is November, and he's paying you salary of November. But what about the salary that is due in the earlier month? Maybe September is also due 20,000. Then you have to receive total of 60,000. So see, the current month is not the only payment you have to receive. You have to track the previous month dues as well. It's similarly, when we're seeing in the P&L account a sale of 100 lakhs is made, and as the owner of the company, you're not just interested in whether you have received 100 lakhs for this year. This is the year 2012-13. So at the end of the year, 31 March 2013, you're not just interested in getting 100 lakhs. If your accountant gives you 100 lakhs and says, see, in this year we have made a sale of 100 lakhs, this year 100 lakhs, take your cash. You'll not be happy. You'll be asking, are there any dues pertaining to 2011-12? Have you made any sales in 2011-12 and yet to receive the payment? That is reflected in the head of debtors. Say for example, debtors is 40 lakhs. So you'll be asking your accountant, not just this 100 lakhs, what about the 40 lakhs that is due to me? Right? This is the sales we made in the earlier years, but we didn't receive payment. So you'll be tracking the total of 140. Right? Then your accountant says, okay, I'll give you only 130. He'll say, what he'll say, he'll be giving only 130. And then he says, then if you ask him, why 140, why 130, why not 140? Then he'll say, 10 lakhs still pending. So this debtors is a figure that continues from one year to another. The amount may vary, right? The amount might vary, but there will be some amount of pending dues from the customer. So if you want to track, if you want to now ask your accountant, the correct cash he should be giving to you is when you will be satisfied as a owner, right? When you will be satisfied as a owner, you will be satisfied when you receive 130. You will not be satisfied if you receive 100 because 100 is pertaining only to this year. They are dues of earlier year also, that is 40 lakhs. So you should actually receive 140 lakhs. This is what you should be receiving. Of course, there is some debtors which are still outstanding as on this year also. So let us say there is 10. So now you should be receiving cash of, you should have received cash of 130 lakhs, right? Same, we'll discuss the example in your case of salary. Say for example, the due for you is 25,000. Your employer is to pay you 25,000 past dues. Now in the month of November, the salary is 20,000. So if he gives you, for example, the actual payment is 30,000, right? The actual cash payment he's paid is 30,000. So there will be something still due to you. What is the balance due to you? So total 25,000 plus 20,000. So 45,000 you should have received, right? But he paid you only 30,000. So still 15,000 is due. Now I'll convert this in some specific terms. We'll call this closing debtors. From the point of view of yourself, this is a closing debtor because this is still payment outstanding. And this 25,000 is nothing but opening debtor, in the sense that the company is to pay you at the beginning of this month. The company should have paid you 25,000. These are the past dues. So this is opening debtors for the month of November. The closing debtors is the 15,000 that is still pending at the end of the month. In between, the current month salary is 30,000. If you want to track the cash, how did you get the cash payment of 30,000, right? If you want to put it in the formula, it is nothing but opening plus salary for the current month minus closing debtors. So opening is 25,000, salary is 20,000, closing is 15,000, right? Closing is 15,000. So how much you got it? 30,000. This is tallying. This 30. This is how you got the 30, right? So in the similar case, if you want to write up a formula for the company, the cash received during a particular year or a particular month, it will be the opening debtors plus sales during that period, that is the month or year, minus closing debtors. That's the same formula which we have discussed. So yes, our answer in 3 will change if 2011-12 is not the first year of operation, because there is something called some opening debtors, right? What if your answer change if the company started offering credit to customers only from 2011-12? In other words, we are saying the company prior to 2011-12, it was existing, but it never offered credit sales. All sales were on cash sales, which means there are no debtors. When will debtors come? Debtors will come in the case of credit sales. In cash sales, you receive cash then and there. So there is no concept of debtors, right? Debtors comes in the case of credit sales. So what we are saying is, prior to 2011-12, the company was operating, but it never offered credit, which means there is no debtors prior to this, which means opening debtors is 0, which is similar to the case, of third, right? So your answer will not change in this case, but it will change in the case, because in the fourth case we are saying it is not the first year of operation. We are assuming that there is something called opening debtors, but in the fifth example there is no opening debtors, so your answer will not change. Okay, so let us take the sixth question. How much cash the company received during the year 2012-13? So what is the cash the company received during the year? So again, we can write up a simple formula, right? The company cash received is nothing but the opening debtors plus sales during the period minus closing debtors. So for the year cash, how much cash the company received in 12-13? For this year, what is the opening debtors? It is the closing debtor of the previous year, right? Please note that the closing debtor is nothing but the opening debtor of the next year. So this is 40 plus sales during the period is total of cash sales and credit sales, right? 380. This is 90 plus 290, 380 minus closing debtors. This is 55, right? This is 365. So the company received cash of 365 lakhs during the financial year 2012-13. Please note that even though the total of the total sales, cash sales and credit sales 380, the company received only cash of 365, right? The last question is a bit tricky actually. Let us see how many of you can answer. Which of the following could not have been the credit sales of year 2011-12? So year 2011-12, we don't know the breakup of cash sales and credit sales. We don't know what is the sales. We don't know any information. The only information we know is the debtors. So the question is, which of the following could not have been the credit sales? So the question is asking, okay, you don't know what is the cash sales, what is the credit sales, you don't know, fine. But out of these 4 options, there are 3 out of these 4 are possible. 1 is not possible. What is that answer? Which is the answer that is not possible? Which of these could not have been the credit sales? So please note that credit sales, debtors go hand in hand, right? Debtors arise only because of credit sales. Debtors and cash sales are not related at all. Cash sales means we are receiving cash then and there. So debtors will not arise. What is debtor? Debtor is amount due to the company from the customers, right? We have made the sales, but we didn't receive the payment. So debtors will arise only in the case of credit sales. So this 40, right? So the 40 which we are getting here pertains only to the credit sales, right? It has got nothing to do with the cash sales. So please note that, can credit sales could have been 40? Let us take the example. Let us assume that the total sales is 200 and cash sales is 40, credit sales is 160. Is this situation possible? Totally possible, because the company made a total credit sales of 160, of which debtors is 40. Possible, right? Because this is less than this, so 160, 40 is possible. Could there have been a situation where company made cash sales of 150 and credit sales of 150? This is also possible, because still 150 is less than 40. Let us take an example where 150 is the cash sales and 50 is the credit sale. Is this possible? This is also possible, because after the 50 credit sales, the company has received cash 10 lakhs. So far, by the end of the year 2011-12, the company has received 10 lakhs and 40 is due. So nothing wrong with it. Let us take a scenario where the cash sale is 160 lakhs, credit sale is 40 lakhs. So what we're seeing in this example is, the company made total sales of 40 lakhs in credit and all the 40 lakhs is pending, which means none of the customers have paid so far. Of the credit sales, right? Cash sales we received 165, but out of the credit sales of 40 lakhs, still 40 lakhs is pending. Please note that data is pertaining only to credit sales. So out of the 40 lakhs credit sales, 40 lakhs is all the 40 lakhs is pending. The debtors is 40 lakhs. So this is also possible. This is possible when the entire sales made on credit basis are still outstanding. But what about the case when cash sale is 170, credit sale is 30? So now we are saying the company made a sale of only 30 lakhs on credit, whereas debtors is 40. This is not a scenario that is possible at all, right? Because we are saying debtors go only with credit sales. It has got nothing to do with cash sales. So when we are saying the credit sales for the year as a whole is only 30 lakhs, there cannot be debtors of 40 lakhs. No way. So in this example, any answer that is less than 40 is not permissible. So this is possible, even this is possible, right? But this is not possible. So which of this could not have been the credit sales for 11/12, that is 35 lakhs, right? So please go through this small exercise, these 7 questions once again. Hope you have answered most of them correctly. Even if you have not answered some of them correctly, that's all right. You'll get the concept as we go along. This is a small exercise, right? So to summarize this, the concept of credit sales and debtors, what I want to tell you is the sales might be same. Take this 5 scenario. The sales might be same, right? 50 lakhs in all the scenarios, but the combination of cash sales and credit sales can vary. In the first example, the entire sales were on credit. In the last example, it is a combination of 40 cash and 10 sales. In between, you have 20, 30. There are various combinations. So whatever is the combination, in the P&L, the sales will still be 50. In any of this combination, whatever is the combination, in these 5 situations, the sales in the P&L is 50 lakhs. So the difference comes when the pending amount. So what is the pending amount here? You didn't receive even a single rupee of cash in the first scenario. So all the 50 lakhs is pending. So that will be reflected in the debtors. In the last case, we have received already 40 out of 50. 10 is pending. So 10 in debtors. So debtors will give you what is the amount due from the customers, right? So in all the above 5 cases, the total sales is 50. The difference is only in the ratio of cash and credit sales. So the balance will be reflected in the debtors. And please, I've already made this point clear. Do not make an assumption that since credit sales column and debtors column are same, if you see these 2 columns are same, so please don't make the assumption that because these 2 are same, this formula holds good. Debtors is equal to credit sales. No. That type of small formula you can write up as we already discussed. So cash received from sales. This is only cash received from sales, not the entire cash flow of the company. No, this is only cash received from sales. You can add up like opening debtors plus sales for the period, right? This is drawn from P&L minus closing debtors, and this opening and closing debtors you can get from the balance sheet, right? So this is a small formula which you can remember going forward.